All right, folks, we are live and we are back. And this is our first stream live. So, those of you that are catching us right now, it's on YouTube. We're going to be streaming to Facebook and some other social medias as well live. I got to say, by the way, besides the welcome piece, is that everything we're going to talk about, this is not financial advice. These are not recommendations you need to take. What we're doing is we're documenting our journey of learning Forex trading. And we're taking this, we want to be able to share things live because things are happening. You can actually watch the charts yourself on a different screen if you've got multiple screens and say, okay, what are these guys really looking at? And and make your own decisions, right? So want to be able to stream this live, but we also want you to know this is not recommendations or advice. We are new at this. We're learning, and we are definitely not the people to give you that advice. But we are the people to document what we're doing and have a lot of fun doing it. So with that, Mike and Steven, let's kick this first stream off, man. Gentlemen.
Sounds good.
Good morning.
Morning. It is morning. It is morning where we are. So one of the first things we talked about, we wanted to do, we want to be able to have let's mark up the charts first. A lot of times before we get here, we'll already have our charts marked up. My guess is Mike probably already has his charts marked up. Just a hunch.
Gold, yeah. Gold is
gold,
also.
yes. So I have not. I actually went in this morning. I had to take a couple days off just because I've been so busy with other stuff. And so I went in this morning and deleted my old markup from Monday, and so I'm starting fresh. So let me pull that up, and I can share my screen on that. And let's mark this up, and we'll look at there's a few pairs that we like. We like gold. We're looking at we'll do GJ. We'll talk about probably UJ, and we'll see if there's any others that we're going to do at the time. Potentially Bitcoin as well. So let me share this screen. So I've got my trading view up, and yes, it is in gold. And for those of you who use TradingView, it's awesome, right? But we're using the Oanda gold chart just so that you have a reference. There's a lot of gold charts in there because each broker has their own feeds, I guess you could say. So if you use something other than Oanda, the numbers could be slightly off here. They shouldn't be far off, but they could be slightly off. So just wanted to point that out as we start. So let's talk about this one. Let's look at this. So I haven't looked at any news today either. Mike, we talk a lot about fundamentals and technicals. Do you want to sort of get into that a little bit before we start to mark this up?
Yeah. So the technical analysis is obviously is our structure and what we're setting up and what indicators we have that kind of allow us to make informed decisions based on what we know. Fundamentals are, let's say, the news, and let's say when our president speaks, or certain things like announcements. Like today, you had the ISM services PMI. That was an important one. Came out at 10 a.m. Wasn't anything that alarming. The ADP non-farm employment change was a negative for the economy. That came out at 8:15. But those were the two main things that came out. The next thing is at 10:30 is the crude oil inventories. And when I say the time, I'm meaning Eastern Standard Time. So in the next 50 seconds, crude oil inventories are going to be released. So like the forecast was -2. The previous was -2.3, and we'll see where it lands.
Okay. Yes, we will.
And in this one, just so you know, like actually less than the forecast is good for the economy. Okay, so if the number's less, that's good. If it's more, that's bad.
Okay. Yeah, and when we normally in the morning, what we'll do is we'll look at what you're looking at. Are you on Forex Factory or
Forex Factory on this one? I have FinViz up as well, but this one I'm specifically waiting for on Forex Factory.
Yep. And that's usually that's my first go-to, and then I'll do FinViz as well. So any thoughts you've got there, Stephen, on just the difference with technicals and fundamentals?
Yeah, some things that you don't realize right away until like sometime after when some other analysis comes out and you read it. Is that like the Venezuelan oil and how that affected the Canadian market and the different, currencies that trade, in Canada and how that affected it. And it's something that you want to realize right off the bat, you know.
That's a great point. Yeah, when we think about fundamentals, it's like Mike said, it's the news, but it can affect all the different things that we're trading. Like if we're trading the US dollar with the Japanese yen and something happens in, I don't know, Yugoslavia, right? It's potential it could have some kind of an impact on the dollar yen pair. So we want to look at those. We want to be able to think through those. And if we know that there's news coming, it's one thing. Like Mike was talking about the Forex Factory, going through there and looking at what's coming up. We knew that there was something around 8:15, 8:30, and then same thing 10:30. I think it was. Numbers just came out, but we're on Forex Factory. It gives you the times when those things are coming out, but we don't know when some politician or someone that has sway, like President Trump, where if he says something, it's going to move a market. And if you're in a trade, hopefully it's going in your way. But if it isn't, it could be very fast. I was doing a trade. I was in a gold trade, and I was taking the trade down when Jerome Powell was speaking. And I was thinking, oh, okay, based off of what he said, and I'm going off of memory now, I could have it in reverse, but it doesn't really matter, right? What he said, I thought, okay, great. Well, that's going to impact inflation. If that's going to reduce inflation, then we're going to have gold is going to go down, right? Because usually if inflation is going up, gold is going up, right? And so I stayed in that trade, and I ended up losing a fair amount of money because that's right. I picked it to go up, and it ended up going down based off the news. But it was, had I jumped out when I heard that, great. But in my head, I thought of it differently. I thought it would react differently. And so that's when I say we're learning. Those are some of the types of things that you got to learn. You got to know those things are going on, and you've got to be there to listen and then learn. Or when you know something big is talking, like the Fed or a president or some nation's prime minister or whoever, you don't necessarily want to be in a trade because it could change things. Is that fair, guys?
Yes.
Yeah, and also understanding how things can impact the economy. So we found out last time that when the crude oil inventory was announced, when it was better than forecasted, that directly impacted the Canadian dollar and the USD to Canadian dollar and the Euro CAD. So for example, when this just happened, as soon as that news came out at negative 3.5 million barrels, I immediately bought USD CAD. And it's short money, it's slow moving, but and that's so far winning. But because the more amount of barrels means we need to get less from Canada, in essence.
Yeah.
Right.
Which means the US dollar compared to the Canadian dollar.
Yep.
US is stronger.
Yep.
Yep. So yeah, so all of this stuff ties together.
Yep.
So fundamentals do matter, but if there's no news, then we're playing on technicals, and that's what we're going to get to here when we talk about the chart. So we probably should have pulled up Forex Factory rather than TradingView at first with that discussion. But hey, so looking at the TradingView, let's mark this up. Now I'm on the 1 hour chart, which is where I like to trade. That's typically where I'm trading. So first thing I'm looking at is where do we have sellers, right? Now, right now, there's a lot of selling going on in the gold market. It's dropped from $5,054 down to $4,920. So over $100 in a matter of under 2 hours, right? So that was pretty good. I wish I had sold right here, but
Well, if you go to the one that was an E3 cross,
The 1 minute.
yeah. Sorry, was it the 5? 1 second. There's an E3 cross, but that's an E3 cross up on the 3, on the 5, on the, was it the 1? I think it was the 1. Yeah. I have to zoom in on it.
Take a minute, Mike.
On the 5
Ex-
you're looking at?
Yeah, I'll find it in a second. I was in at a trade and then I saw the cross happen and I jumped out. And
So for someone that's watching and doesn't know what the E3 cross is, real brief.
So there's two directions. Obviously, it's heading in an uptrend or heading in a downtrend. But basically, we're looking at 3 moving averages. Okay, so there's the 20, the 66, and the 200. The blue line is the 20, which is the simple moving average over the last 20 candles. The red is the 66, which is a simple moving average, the amount of basically average movement over the last 66, the price there. And then 200 is the gold one over the last 200 candles. So in this format, I'd say right now where it's gold, red, blue, that's the 200 on top of the 66 on top of the 20. This indicates a downtrend.
Yeah.
So that's what it's saying right here on the 5 minute. And that happened about, I don't know, 20 minutes ago, 30 minutes ago.
Yeah.
You can see right where that cross first happened, where you had not when the in effect. So it's when the 66 crossed the 20. 1, 2, 3, 4, 5. About 30 minutes ago.
Yeah, right here.
Yeah. Even after, yep, that's what that one did. But then go off to the right more on the goal on the 200. More, a little bit more. Right there. That's where we have the full cross because now all 3 are officially in the right order.
Yeah.
Because now the red is broken through, the 66 is broken through the 200, and the 20 was already below the 66. So blue was already below red. Red broke through gold. So now we have a downtrend on this.
Yeah.
But I had been using that base and was about to and got in on that quick little upsell of the those 2 candles. And then saw the cross happen and immediately got out because I didn't want to violate the cross, and happy I didn't.
Yeah, I'll bet you are, because that if you were in a buy, meaning it's going up, you would have lost big time. So,
right.
But
at the same point in time, that's what I was saying too, like having your stuff set and ready so you can just simply know how to get in and get out, and having not have to jump back and forth between screens, and having, if you're going to be purchasing or doing your actions or your takes or whatever, you're going to do that on, you got to have like one location, whether it be a computer or a phone or some device where you can do that, and then have all this up in front of you as well. Because as currently right now, the one that we use, the broker that we use, is not integrated with TradingView. So you got to have your stuff ready, because going back and forth, you can lose important information or stuff can get lost in translation. So it's important that we have you set up as simple as possible, just to execute as fast and efficiently as possible. Because as we've talked about, gold moves fast. So you taking 2 seconds to respond could take you from being profitable $30, $40 to negative $50.
Yeah, it's pretty wild.
Yeah.
And so you've got to understand that with gold. When we're looking at, let's say GJ or UJ or something like that, they move much slower. So if you're really just getting started, just learning, you might want to ease into gold and start with some of the other Forex pairs. But I mean, you can see, just for instance, right now we're at 94.15, right? And it seems to be just moving a little bit, 14, 16, but it jumps, now 13, now 11, right? And if it's going to continue to go down, great. But you want to look at what's causing this. And then we get that E3 cross that says, hey, right here, we knew it was going to turn around, and you jumped out, which is awesome. But I won't get into a trade if I haven't marked up my charts, if I don't know what's going on, I haven't looked at the news, because I want to know before I make a decision. I made that mistake too many times at the beginning.
Yeah, and I think I'm a very system-driven person. So I prefer to go in, and first thing I do is mark up my charts. Very first thing, I'll take a quick look at the daily, then I'll go to the 4 hour, then I'll go to the 1 hour. I do most of my markups on the 1 hour. I'll
Yeah.
do some quick markups on the 4 hour and sometimes in the daily. Daily I definitely do every 2 weeks, but sometimes I won't mark up the daily that for that day unless there's something specific that I'm looking at that caught my attention. But I
Yeah.
do most of my markups on the 1 hour, and then I will do some markups on the 5 and 15, but not extensively. Those are simpler markups for the day. But after I do that, then I go check my news and my fundamentals and see what's coming. Because once the structure is in place, now I can go to the fundamentals to see what else could influence this, what I have. So my technical baseline is done. Now let me go to my fundamental baseline and see what's coming, or what could impact things, or what could sway the market.
Exactly.
You know,
And
if I can add Don, if somebody's new and they're looking at this chart and they're saying, "Yeah, I don't know what this means," but you know what? If you go, the three of us back in October, we didn't know what this meant either, and here we are today. And the E3 strategy is the educator that we work with and we follow, and we in a community, and we're online with him 7 times a week. That's his strategy, and that's what he's taught us,
Yeah.
and basic fundamentals. So just if someone's looking at this and saying, "I'll never get this," stay at it. Go in the back office if you're in build, and you can see previous training classes, and it starts to sink in real quick.
Yeah, and the other thing too is that E3 strategy that we're talking about here. I mean, this isn't just a guy that's been doing it for a few years that created this thing and he's teaching it to a small group of people. He does presentations across the country. He goes in and presents this to trading groups and to people in the institutional side of things. He doesn't do anything for less than like mid 5 to 6 figures, sometimes even more, depending on the engagement.
Right.
We just have access to him due to our community that we're part of. And, you know, just to let you guys know, if you look at Don's screen right now, you're going to see those green and red arrows. Okay. So one of the things that he created is a tool that basically goes through and lets you know that now's a good time to jump in. So not only does that green arrow pop up on your screen, but you get an alert that pops up on your phone, on your watch, on your computer. And then it tells you not only that, it says, here's where you want to set your stop loss, which is the red SL. And it tells you there's where your take profit is 1. And see that behind that take profit is a blue square, and that's your entry. So it's saying as long as you get in at that entry point right there, as long as you get in at that, just before that, or very, very close to that, then the first thing we're trying to do is get 20 pips, and we can get into that later. But bottom line is that's that first take profit 1. Okay, that's the first goal that we have. Now, if we think it's going to go a little bit further, yeah, we can look at take profit 2, but now we're just getting a little bit greedy. And as you learn more, you can get a little bit more risky with where you want to take that. But out of the gate, if you just make sure that you're getting in at the right entry point and you're getting out at your take profit 1, those green and red indicators that we showed you, those arrows and those alerts, it's going to hit the overwhelming majority of the time. Like, I think saying 80% is extremely safe. I think it's closer to 90 for take profit 1, if not possibly higher.
Yeah.
For take profit 2, the number is different, but now we're getting greedy. Now that's saying just if you don't take it here, then we can look for it to go up to here if it doesn't turn. But there's a bunch of other stuff that can happen in between. But take profit 1 is pretty much a gimme, probably 90% of the time.
Yeah, I'd agree with that. Every once in a while it misses,
Right.
but you can see it said get in here, right? Take profit 1 is here. It hit that. It hit that in that 5-minute candle. Within 5 minutes, you would have made whatever the you had put in for lot size, and then but it continued to go up, and that wick actually hit take profit 2.
Yep.
So it did go up there. It didn't close there in that 5 minutes, but within 10 minutes, it went from here to here. Because this is on the 5-minute chart. But then if you waited for that and you didn't get out, you said, oh, I'm going to continue to go up. It's going to continue to go up. No, it started to plummet.
Yeah, you would have lost money.
Exactly. So, so there's definitely some things you want to do there. So what's coming up here? There's some changes coming up, it looks like. Just made a call. So it says, get in now. This is going to be this is a buy. It's expecting to go up. And it's going down right now.
45 just bounced off that. It's at the front wall of a 1 hour demand zone. And it already went down.
They haven't marked this up yet. I don't know.
Yep. And it went down to almost nearly the back wall.
Yeah. And which is great. So if it bounces off of there, then that's fine and it goes up. But TP1, did it hit TP1 on it? No, it didn't.
Just missed.
Yeah, it just missed. So the question will be, will it continue? So you are gonna have that happen, but it's funny because now we just had two different calls, and one was very successful. One may still be, might not be. We'll see. Right. But it's nowhere near the stop loss. That's one of the reasons for the stop loss is where they are.
Yeah,
Right.
there's also a good chance that it's going to come back to that demand zone and then retest the demand zone and then jump back up.
Yep. Yeah. So it definitely is not done. Now, if it hits here, it's done.
Yeah.
Or wherever you would jump out, because remember, as it's going down, you're in loss, right? So we call it drawdown. So you have to have a little bit of stomach for that. All right. And most of the time when you do, if you've got a stop loss in an appropriate place, you're going to do fine. But every once in a while you won't. So, but this is interesting. So let's mark up the chart. We've got just a little bit of time here left. I want to show everybody this piece. So when we look at the charts, the first thing I look at, and you guys can certainly correct me, the first thing I look at is where did things turn, right? So we had a significant downtrend, right? Came up here. Now this candle is significantly larger. It's an exaggerated candle compared to this one. So we're on the 5 minute. I'm gonna mark this up on the 1 hour because that's where I like to do things.
With that being said, before you go for 1 second, go back to the 5 minute for 1 second.
Yeah.
So on that candle right there, just saying, see, there is a 5 minute demand zone down the bottom there, and we're not going to mark it up right now. But you talk about trends and stuff that we're learning, and this is stuff that you guys will get to see. That's a little demand zone right there. Yep. And then right next to it, you have an engulfing candle, which means it's basically bigger than the candle off to the left. Okay. Yeah. And that candle, an engulfing bullish candle, indicates that the next candle is likely going to be bullish. So your next candle should be going up. We have 1 minute and 45 seconds left, and it's about to hit. It just hit TP1.
Yep.
So it did as we expected, on its way to TP2 now.
Yeah.
So we'll see what happens.
Yeah. It never got close to the stop loss. Although there was some, you get a little concerned as it starts to go down. But yeah, we've got this demand zone.
If you were in that trade though, you're out with your win with $20 take profit. So you just profited, depending on how much you put in, anywhere from probably $5 to $40, depending on what you put in.
Yeah. So
define a quick moment, Mike, on what you're talking about dollar amounts. So somebody actually.
Yeah. So you can choose. It's called lot size. So you can choose the size of your trade. And that really correlates, that we recommend that, and we're taught too, that really correlates based on your balance and your risk tolerance. So
you're looking at $50, $100.
Yep.
What's the person putting in?
So the way that we're doing it with the current broker we have is we're getting 10-to-1 leverage. Okay. So for every, let's say $100 out, let's say we invest in or put into the brokerage, we're getting $1,000 to trade with. Okay. So that means we get to get a lot more. So on a trade like this, when you're just starting out, you might only be trading with like a couple of dollars. Yeah. Your loss is probably going to be max about $6 to $10 on a trade like that, ballpark, depending if you're starting off really low. You're going to get up to the point where you're going to be able to stomach easily doing, it's going to potentially drop $100, but that's going to spike up and win you 150, 200, you can profit it. You learn that. But when you're starting out, First thing we do is you paper trade so that there's no money getting lost. You're just learning how to do it, and you're learning when to take action and when to see it and trusting what you're seeing. And then you'll be able to make paper money. And then you move over to start using real money. And you can either start with those lower lot sizes if your risk tolerance is low. If your risk tolerance is high, you can start with decent lot sizes, which basically means the amount that you're for your trade. Okay. And there is a formula to it that we'll get into later for the most part in recommendations. But the bottom line is, based on our comfort level, based on the number of indicators, based on our balance, we're going to adjust the size of the trade. And that's going to directly impact. So a trade that goes at, say, 20 pips on a very low, it might only make us $2 or might only make us, but if we have a bigger lot size, that could be $20, $200, depending on that size. So depending on what you're putting into that trade is going to directly correlate to your risk to profit or to lose. But that's why our goal is, again, Warren Buffett methodology. Rule 1, don't lose money. Rule 2, refer to rule number 1.
Yeah. Good stuff. And so
I want to interrupt you again, Donnie, so you can mark up that chart.
Well, that's okay. I was just going to point this out that, we did go into profit. And if you've done the take profit right after, you were good. You made some money. But if you were getting greedy thinking, and by the way, there's nothing wrong. If you really think it's going to continue to go up, you can stay in. We're not saying don't do that, but it gets riskier and riskier unless there's some fundamentals or something out there that says there's a reason why this is going up. So you've got to. What we want to do is we don't want to gamble. Right? This is not about gambling. This is about knowledge, skill, and following patterns. Right? And as you get better and better at it, you're going to be more and more successful. And so I'm going to go back to the 1 hour here really fast, just because of time. By the way, as I do that too, one thing I did want to say, and you'll notice that chart looks a little bit different, still the gold chart, but these are 1 hour candles rather than 5 minute candles. So this is how much it moved in an hour, right? Compared to those other candles, which are 5 minutes. Every 5 minutes there was a new candle. Okay. So these will seem to move a little bit slower. Okay. But above not that side, right up there, right? I can get my finger in the right place. You'll see join our quest, right? So we're on a quest to help people, for us to do it. Because remember, we can't give you any recommendations. All we can do is tell you and document our journey. But we're in a quest to take $250 and learn with it in Forex, and over time turn it into $1 million. That's the objective. If you want to join us in that quest, go to q2am.com and just register. One of us will reach out to you at our next available opportunity, and we'll get you started into the quest. All right. So there's some different things there that you'll want. We can talk about that at another time. But when we go to looking at charts and charting, the first thing I look at, which I started to do when I did this on the 5 minute, but now I'm gonna delete this because we're not on the 5 minute right now. And I'm looking at, okay, where was there a change? Like I said, over here, there was a big change. And this is above. Gold right now is trading right here at 49.33. So I'm going to mark this up. This is our supply zone. And let me change this here. So why I did that, and I love how Donnie explains it. This is how I learned it, how it actually made sense in my head. We want to know where the buyers and sellers are, right? When we're in a trade, if we know where the buyers and sellers are, then we can make the right decisions on our trades. So we know that there's, right here, there's a whole bunch of sellers that jumped in and started selling gold. Well, that's why it came down. Okay. So we know that this is a point where a lot of sellers hang out. If you want to picture it that way, then this is a point where, hey, this is a great place to take a sell, but it might not be a good place to take a buy. So buy just says it's going to go up. Sell says it's going to go down. Did that come out right, guys? You can
Mhm.
correct.
Yes.
And also, I mean, the red and the green helps. That's why I like the candles, these colors.
Yes.
What does green indicate to you? Go.
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 What
Yes.
is red is like, stop. So think about it like this. What you're yelling at your computer as you watch green or red candles. That's the way I kind of pictured it when I first heard it. I was like, when I see green, I'm like, go, 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 because I want it to go as high as it could. And if I see it dropping red, I'm like, no, stop. So that's how like I got it in my head right out of the gate.
Nice.
And Mike actually does talk to his computer.
I do.
Yep.
Yes.
I do. I'll admit it.
Yeah.
Uh,
Actually,
so-
Don and I had an interesting trading session really quick. It'll take 2 seconds. Don and I had an interesting trading session like a week ago, and something happened that we were both expecting. We got on a phone call and we're both sitting there talking, not to each other. We're both of us talking to the laptops, like as we're watching this thing play out. And then we were like, oh, wait a minute, we can talk to each other too.
That's
But
right. And that was
pretty-
a lot of fun.
Yeah, and it's normal. I mean, that's what you do.
Yeah,
So.
it really is. And who cares what normal is anyways? So here's another gold alert. Sorry, I know my alerts are a little loud. I don't want to miss them. But this is an Einstein gold alert to buy. So, and this was on, which chart is this? This is on the 15-minute. So this is a buy that just came out. And you can see it's going in the other direction. It's white, right? So we were just talking about green and red. But when it's white and it's surrounded by a color, it means it's exhausted. It's moved a lot. Okay, and you can see it's moved down a lot here. But it is still going down right now. This is the stop loss point. So as long as it doesn't get there, we're good. But at the same time, if you look, it did, if you'd gotten in here, it did go above TP1. So you would have profited right off the bat. Right.
Yep.
Look at that movement.
And also, where is the stop loss? It's just below the 200 moving average, because what we would expect it to do is go down to that 200 and bounce right off it.
Right. But look at that. This just happened since we've been on here, because it was about here when we got on.
Yep.
Right. So it's gone. How many dollars? Let's see. Let's say it's gone down $22. Gold dropped in what, 30 seconds, 60 seconds? That's how fast. When we say it moves fast, it moves fast. So let me
And
go
by the way,
back.
$22 doesn't mean that's how much on the public market, like per ounce. That's
Right.
what we're talking about. That's not how much like the trade is. The trade's even more than that.
Right. Well, I'm playing with 200 to 1.
Yeah.
I'm not even doing 10 to 1 on mine.
Right. That's
So,
smart.
yeah, I can gain, but I can also get knocked out a little faster. So, but it's overall it's good. So let me go back to the 1 hour. So when we look at this, so we've got this supply zone up here. So our demand zone, what we want to look at is, where are the buyers hanging out right now? This is just pummeling through, but where did the buyers hang out last time? So we had a point here where it was going down and the buyers took over. So there's certainly some buyers here. However, this blew right through it, right? I am going to mark this. So right now, this candle is still active, right? We're on the 1 hour, and I can tell you we've got 47 seconds left in this hour. So this at the time was a
Demand zone.
demand zone. But because it's gone through, if this closes in the next 30 seconds below this area, this stays, I'm going to keep it red. And it looks to me like it's probably going to, but it could flip, which means we've got to look further down for where this could go. So we got a 66 moving average, which was to your point earlier, Mike.
Mm-hmm.
So it could stop there. It could go down further. But what else is below this? What other areas? So we got a huge consolidation area here. Yeah. So yeah, it definitely closed and broke this. So this is now a supply zone.
Yep. And above that 66, if you go off to your left there, you have some demand zones from before.
Yep.
So it's
Yep.
it's right now in a demand zone.
Right. Right. So let's look at this one right here. It's a small one, but nonetheless, it's right there. Because I'm looking at this one. Okay. And let me change it just so it's visibly
Even,
different.
and I was saying, even if you go, let's say one, like about 4 candles off to the right of that one, to the latest,
Over here.
down one, right there. Because you have those 1, 2, 3 candles, so that's how it ends up. Yep. So that demand zone right there, that's the one that I was looking at.
And I'll mark that.
So we're approaching the back wall of it right now. And because we're at a low, that's also we're about to go into a liquidity zone, which we don't even need to get into right now. But bottom, we're almost there.
Yep.
The back wall. So I mean, now would be a great buy.
Yes. So, and that's what we're looking at, because we believe that there's right here, there's buyers that want to take it back up.
Yeah.
Right. And we know because they were here before. And so they took it up and then they probably wrote it down, because you can profit both ways. So it'll be interesting to watch, but usually if it hits that back wall, it's going to bounce up, especially the first time it hits it.
Yep.
And it looks like it's taking, and it certainly has bounced off the wall. So now it's just a question of where does it go?
Yep.
But had you bought it here, let's end with this for today. But had you bought it at the back wall and you sold it over here, that's 146 pips on that. $14.6.
Not too shabby.
No. And now it's broken through that wall. So there's something. There's a reason why gold's selling.
Yep, and that bottom of that wick right there is a support line and a low.
This one right here.
Yep. So that is a line that we would expect it to potentially bounce off of if it does go down that low. If not, it'll probably go all the way down to the 66.
Yeah. So, and there's no real way to know for sure what it's going to do that I know of yet. I'm trying to learn everything that I can about it, but that's pretty. Think about it, right? I mean, did it come all the way down here? No. Is it reversing? What matters is where does this candle close? Now this is a new candle because this is a new hour, right? It went just after 11 a.m. Eastern time. Everything we do is on Eastern time here. And so we got 56 minutes on this candle. There's already been a fair amount of movement in this candle. So we'll see where it goes. But so we'll do more charting and actually plan to take some live trades with you as we continue to go. But hopefully this is helpful. And again, this is not financial advice, guys. We can't make that, but you can join us in the quest. So go to q2am.com, join us, and let's have some fun learning to trade. Any close out comments there, guys?
I'll let Steve. Do you want to say anything?
Follow us and trade it as a community. If you're following us and you get into the Build Academy, you'll start learning. It's hard for us to really say to you it'll be transformational, but it is. And that's what happened to each of us independently when we started. And here we are today.
Spot on.
And really quick, just as you guys will learn, I'm a very no-nonsense person. If you don't have the ability to do what you want, when you want, where you want, with who you want, and that sounds decent to you, then it is an opportunity of a lifetime. And I'm not overstating that,
Correct.
because the confidence and the knowledge that I've gained in just a few short months and a quarter year, I've said it before, I'm going to say it on our first live podcast here. Watch out for where I am 6 months to a year from now.
Oh,
Like
yeah.
I'm not even saying that, like, we'll see, maybe, hopefully. No, you'll see. Like, I could not be more excited, more confident, have more faith in my community, in the people I'm learning from, and the results that we're already getting. So this is it's exciting times, and feel so grateful for both of you and for the entire community that we have access to, and for the trainers that are just next level. So happy as couldn't be happier, or have more gratitude for where I am right now.
Here, definitely. You as well, my friend. All right. Well, with that, this is the end of today's episode. We're going to be back. So we'll be streaming right around 10:15 a.m. each morning on Monday, Wednesday, Thursday, and Friday. That's the plan. So watch for our streams. Go back, watch our old podcasts, the other episodes, and most of all, join us in the quest. Go to q2am.com, join us, and let's have some fun together and learn. And over time, hopefully make a lot of money too. Right? That's the plan. So take care, all.